second day running in the green for the Asian market.
Q2 numbers for TCS is likely to be muted.
Nothing at the moment is really changing the supply-demand balance for oil.
First up is about 19,800. Straight off the bat, the resistance comes in. To be precise, the number is 19,778.
MCX has announced October 16 as go-live date of the new platform.
Double upgraded India to 20% overweight versus 40% underweight earlier.
First tick is pretty strong, so 70 points higher on Nifty.
3 or 4 months, every month we have seen some amount of volatility intra-month.
Mumbai market continues to grow because of the requirement of the demand for the upper end of the segment.
We have acquired 250 beds in Guwahati.
It's a good-looking screen, right? We're adding on to that 170-point rally that we had yesterday.
There is a bit of an outflow that we're seeing in the large cap scheme. So around 110 crores has moved out of the large cap space.
More than 1,200 dead reported on the Israeli side now, more than 900 in Gaza.
Second consecutive day of gains is what we are seeing today. 120 points higher on the Nifty.
Well, that was the day so far. You're with us here on a fresh new edition of Closing Bell. We're coming to you from the CNBC-TV18 News Online studios. I'm Prashant. With me, my colleagues Reema and Surubi here. Guys, hi, good afternoon. And you guys are twinning, not exactly twinning, but
Same family, similar family. Yeah.
Same family. And of course, Nigel is joining us from the newsroom floor. Nigel, hi, good afternoon. So things looking a little iffy once again, especially on the banks index, right? I mean, that is the index which has been the trouble spot. In the morning, we were saying that the Nifty bank did not make a higher high. And the hope was that the Nifty will just pull the bank Nifty along with it, right? And the moves usually on the Nifty bank are faster. But that hope has been belied. We're not seeing that. The Nifty bank is actually corrected over 300 points from the day's highest level. Nifty is holding steady. I mean, there's not very much trouble there. That also has spent the most amount of time around that resistance level, which is 19,778. In the morning we were saying that now maybe you need to start to look at retracements in terms of how high this market will go if it is going to clear some of these levels out. So we looked at retracements of the recent fall, and the 50% retracement is at number 19,778. We are marginally above that, so let's see what the close looks like. Real estate, FMCG, autos, these are the top gainers that you have in terms of nothing like yesterday. Real estate index was up about 5% yesterday. It's marginal, 1% today. Mid caps and small cap, both those indices are also off the day's highest level, but they still got gains, about 0.5% each. Reema.
Hi. It's been a very low volatile kind of session. So if you pull up the intraday chart, you would see the Nifty is moved in all of a 0.4% range. Very, very steady through the course of the day. Gap up opening, and we've hovered around 19,800. I'm watching the IT stocks. So TCS, ahead of its numbers, is down close to about 0.2%. And right now, even HCL Tech has a bit of a knock. So from the day's high, HCL Tech has slipped close to about 1.5%. So IT stocks should be on your radar. By the way, Europe has opened up on the back foot. So the CAC is down close to about 0.5%. And the German index, DAX, too, has opened up flat with a bit of a negative bias. So there is some profit booking or a pause after yesterday's big rally in Europe.
I guess because we've had a pretty strong session yesterday. So maybe there's just a bit of a halt coming through. I'm also looking at the mid-cap index. Don't want to be the party pooper here, but the mid-cap index has actually cooled off. Nifty is held very steady. Mid-cap index was doing a little better in the first half of the day. It's still looking at gains. I mean, still clocking about 0.5% rise there. But let's see how that goes, because we are in that critical last 1 hour. Having said that, there are lots of stocks flying around. We'll talk about a lot of them as we go forward. I mean, just look at the reaction on a JK Tyre. There's an MK report with a very aggressive price target on JK, and we'll talk about that. But that's just an example of the sentiment. 13% up on the stock as we're speaking. You have some names like Indus Towers that are doing well. There's a Zomato that's managing to put on about 2.5% as well. So here and there, I mean, there is some excitement on the mid-cap screens for sure. PSU banks are cooling off today. That's a trend that's very, very clear. BOB, obviously, because of their issues with the app and, the 3% cut, stock has been looking at that right from the morning. But even beyond, the PSU bank index is at the lows of the session. And your UCO, IOB, a lot of these names are moving down. Even non-PSU tier 2 banks, look at RBL, look at Bandhan. That's where there's some caution in the market. So perhaps worth keeping that in mind. Bank Nifty itself, and that's the other slightly lackluster part of the day, is that Bank Nifty hasn't shown any strength, and that's also cooling off. Just a 0.25% increase on the Bank Nifty itself. So let's see how this plays out. But Nigel, for what it's worth, Nifty's trying to hold on to 19,800.
Well, I'll tell you what, earlier this morning we made this point that we have big cues that are coming up. That is the TCS numbers. You have the PPI data that comes out from the United States as well as the Fed minutes. So taking some money off the table may not have hurt, because you started around 19,770 and now it's around 19,800. As you mentioned, yes, the Nifty Bank, that's the problem pocket. And the high of the day was around 44,700. That's part in line with what the 50 and the 100 DMA is at. So on the upside, that 44,700 mark, which is the high of the day, and it's closer to around this 50 and 100 DMA odd, that is a near-term resistance level. Now you'll have expiry that will play out as well, the weekly expiry. So we could expect some kind of a move on the Nifty Bank even from these levels. So we're holding around that 44,470 odd. Let's see which way it swings, because volatility could pick up in the next 60 minutes or so. And that's what's pulling down the Nifty. Otherwise, it would have been a rather good trading session. We could have easily been above that 19,850 odd mark. But how do you position yourself in the final hour of trade? Mitesh Thakkar is back with us. Well, Mitesh, you have been talking about that 19,725 odd mark. We've crossed that. What's the trade from here on?
Yeah. So, good afternoon, Nigel. I think, we talked about the fact that once we get past 19,725, and that happened with the gap up today, we'll look at 19,850. We nearly got there. We got a high of 19,839. But I think the key in the next 1 or 2 days could be the Bank Nifty. Now, the Bank Nifty has come up from the day's high, but is now trading at the intraday average support area. So I think, if it can hold about this 44,400, 44,350 zones, which is roughly about 70, 80 points lower from here, then I think the Bank Nifty should retest the highs of the day, which is closer to 44,710. If not today, then maybe tomorrow. So I think the Bank Nifty, people can take position with a 100-point kind of a stop here and look for about a 250-point kind of a rally. But if that breaks, then I think that will disturb the Nifty momentum as well. Though I still believe that there is a higher chance of Bank Nifty going up. So trading with long bias, I have a buy on Reliance after a long time. It's coming out from oversold levels. So taking a very tight stop at about 23.20, which is about 13, 14 points lower. Buy Reliance with a target of around 23.75. And City Union Bank, disclaimer, it's a recommendation to our clients. I also have positions in the futures market, so vested interest is there. CUB is a buy with a stop at 135 for targets of 142.
Mitesh, thank you very much for that. Let's turn our attention to Hero MotoCorp. Now, that's the top Nifty gainer today, up 4%. Sonia is here to tell us more. Sonia?
Well, thanks a lot for that. So, today Hero MotoCorp has seen a big move. Just to take you through what CLSA has put out in terms of a note, they've upgraded Hero MotoCorp to a buy, and they have raised their target price to 3,700, which is well above the current market price. Their earlier target price was 3,142. They've also raised their earnings estimate on the stock by about 7 to 10% in FY24 and FY25. They say that the average realizations of the company will go up now because the share in the premium segment is rising, and hence their margins will also improve going forward. And even on a valuation parameter compared to the rest of the two-wheeler basket, the stock is quite attractive. Stock is trading at just 14 times PE on an FY25 basis, while its peers like TVS Motor are trading at 20 times plus. So both on valuation as well as on growth, it's looking good, and hence CLSA has upgraded the stock.
Okay, that's a big move on Hero Motor, 4% and an interesting price target as well. They see another, I think, 600 rupees from where we are right now in Hero. But Sonia, it's not just Hero Motor, right? The other one is JK Tyre. My God, this note from MK, it's literally fired up the stock. So what is making MK so bullish? What's their thesis?
So the main, prognosis of the note is that the stock can potentially double in the next 3 years. So let me just take you through the note. They've initiated a coverage on JK Tyres. They have a buy with a 55% upside. So they have a target price of 415 rupees, and the stock right now is at 311. They say the stock price can potentially double over the next 3 years. There is a structural improvement that they are seeing in the tyre industry, and they mention a whole host of reasons for that, whether it's enhanced export competitiveness, premiumization, calibrated capex. All of this is positive for the company as well as the industry. They also talk about how JK Tyres has a lot of financial discipline, especially in their capex plans. They have a long calibrated capex plan, and that is a big positive. The company is in fact targeting a 25% long-term debt reduction by FY26. So not only are they seeing a good growth path, but they're also going in for some balance sheet improvement, and that's what MK likes. Back to you.
Double in 3 years, Sonia, right? In a market like this, you'll say, okay. So, as someone said, right, a bull market is when management targets, brokerage targets, all are achieved in we're not talking about yearly time frames, but monthly or even earlier. So you've got a big move coming in on the back of that note, which MK spit out. 310 is where JK is at. Gurmeet Chadha is with us, managing partner and CIO at Complete Circle. Gurmeet, good to have you with us here. Thanks very much. Tires as a sector, what's the view? And Sonia outlined what MK is saying on JK. Do you have anything in the portfolio there?
So Prashant, what is I think attracting attention in market is now anything which has more value. We saw PSU banks within auto. I think tire was one. I would say inexpensive segment, not calling cheap. Within that, I think JK was very cheap. I think what's done worked well for them is the export competitiveness has improved. They're working well on even the replacement demand. So that part of the portfolio is also doing well. There is, as the note also says, there is very calibrated capex, which is and I think if you see the margins pre-COVID, I'm not talking about COVID period because that is an aberration, was around 10.5, 10.6%. So now even the margins are around 12, 13%. And then obviously there is debt reduction. So it's a combination of operating financial leverage and low valuation. But this is what happens. Anything gets identified, it zooms up in a day or two and doesn't leave much room in terms of margin of safety. But in general, as I said, auto is coming from a long cycle. Almost 2016-22 was a washout period. So there is a lot of value in a lot of auto ancillaries. We track Sandhar, we do Sona, BLW, a couple of other forging companies we like. And you have to map the value chain. So what you're bullish on, so we are more bullish on passenger cars and we're mapping that value chain, end to end with electrification.
Gurmeet, what about Bank of Baroda? So today there was news about how RBI has disallowed onboarding of digital customers through their mobile banking app. But even a couple of days back, we got their Q2 business update. And again, there is nothing to, drive excitement. I think it was about a 4.5% deposit growth, advances growth of about 2 to 3%. Now, considering the stock has doubled in 18 months, do you think this recent news flow could result in a pause, a halt in the stock?
See, that's always a risk in PSU banks. Some I would not say accident, but some adverse development, derailing plans. And that's the reason you have to be tactical. You can't be long. I think what's impressed with BOBs, after like 10 years, I saw 1.1% ROA. They are guiding for double-digit ROE over a period of time. The wholesale retail book now, the balance is very nice. I think it's 45, 55 now. Retail book, they have been growing at 18%. The management is guiding for that number. Obviously, this development is a bit of a setback, but valuations still remain, and if they can work around it, I think this is one of the large PSU banks which could still do better. We are more on SBI right now. It's been a bit of a subdued performance there after a very soft Q1 as well as the Adani episode. I think that's where we find more comfort, both in terms of the size of the book, the CASA side, and the work they have done on the credit side.
Okay, so that's a view on some of the banking stocks. Gurmeet, hi. Good afternoon. I can't help but draw your attention back to JK Tyre, right? This is, of course, one brokerage sounding extremely optimistic. Now, I don't know, Sonia was saying that they're also looking at balance sheet improvement at JK if that becomes a trigger. But it was a little surprising that they're so bullish on JK. It's not necessarily a sector call on all tyre makers. But what are your thoughts? Would you concur with this kind of enthusiasm?
Subi, that's what I said. I think when anything positive gets priced in too quickly, the valuation comfort is there. Also, the industry is undergoing transit. We have better infra roads, so we are riding more in terms of number of cars. Then, as I said, the replacement demand is rebounding. S2 is likely to be much better. Their export portfolio is doing well. The raw material pressures have eased a bit. They're not as bad as what they were. Not as good as Q1, but they're still relatively eased. And in JK's case, they're talking of debt reduction, which gives you a financial leverage as well. So there are other names also. Also, one of my auto friend told me that the EV cars are heavier, which also means more tires get consumed, both EV and hybrid cars. I'm not an auto expert technically, but that could also eventually would add to it, whatever little bit it adds over the period of time.
You know what, Prashant, I am getting way too many flats. I think I'll be in the tire market soon. I'll do my bit to aid volumes. Let's see which one I go for. But that's on a lighter note. Anyway, tire troubles for later. Right now, we have to take a bit of a break. We'll come back on the other side. Our conversation continues. And in a bit from now, we'll also be joined by Dinshaw Irani, CIO of Helios Mutual Fund. We get chatting with his view on the market as well.
Yes, Papa.
Life doesn't stop for anyone. Even we won't let you stop. At every stage of your life, with LIC, you are always insured. LIC, हर पल आपके साथ.
टिप चाहिए? पैसा लगाना है? तो सेंचुरी प्लाई क्लब प्राइम पे लगाओ. डूबेगा नहीं, चलेगा भी नहीं, कोई खा नहीं जाएगा और मिनिमम 30 साल का रिटर्न देगा. अब इससे बेटर इन्वेस्टमेंट है? तो बताओ. सेंचुरी प्लाई क्लब प्राइम, रहो बेफिक्र.
कांधे पे मुझको बैठा ले चल अभी.
सब उस घर जैसा ही तो कर दिया, फिर एक ही शहर में अलग घर क्यों?
क्योंकि अपनी एक जगह बनानी थी पापा, जिसे आप भी अपना कह सके.
Dulux Velvet Touch feels like home.
Hey, what we have is more than just a feeling. It's what we believe in. Now that you've changed, will you be the same? 'Cause you're way ahead now. 'Cause you're way ahead now.
Higher interest rate of up to 7.5% on savings account from RBL Bank. Visit rblbank.com or your nearest branch to open a savings account today.
Welcome back. Well, the markets continue to hold with strong gains, but the Nifty Bank is virtually unmoved. It's an underperformer. It's still up close to under 130 points. Let's see whether or not it wants to give another dash towards that 44,700 odd mark, or will we see a bit of a correction in the last 30 minutes? That for later. For the time being, let's focus on IdeaForge. It's surging in trade. We actually caught up with the management of the company in our special deep dive segment, and we dove into the business. Sonal is here with the key takeaways from that conversation that she had with the management. Sonal?
Thank you so much for that. Well, yes, we spoke to the management to understand their business and take a deep dive. And interestingly, they spoke more about the strategies and the fundamentals of the business. They said that they have significantly invested in technology, and that would be the growth driver. And they have filed 63 patents, out of which 25 have been approved globally. The patent costs or the IP costs, they are currently at, as a percentage of revenues, in double digits, and that will continue to be the case as well. And they do not depend a lot on imports. So we've been talking about supply chain disruptions, but IdeaForge does not get impacted by that. China right now is looking at limiting supply of components to drone industry in India, but they do not have a big dependence. In fact, imports would be around 15 to 20% of revenues of the company. There is a tender business. When asked how does the accounting happen and how much time does it take to execute an order once they get it, they said it takes around 12 months to execute a particular order basis the tender and the LOI level that they are at. They also said that they will continue to report strong margins at that 48 to 51% mark with current and upcoming projects that they are focusing on. Their working capital, which is at 200 days, will continue to be at those levels, and they have expanded via their reseller partner network. They will also be looking at North American markets, which would be a big opportunity for them. Exports right now is in low single digits. Some of the segments which they are not looking at would be consumer photography, which did see some growth phase internationally, but now they think that has subdued. They do not see much value in consumer photography drones, and also fertilizer drones, something that a lot of companies are talking about, but they think this would be a low ROI business. So that's why they are not so interested in that, but they continue to remain their growth targets both on the top line and the margin front.
Okay, thanks a lot for that, Sonal. Well, it listed, I remember, in style, and then from there it saw a big correction, but as Sonal just had that chat, a few days ago with the management. Hi, Gurmeet. Good afternoon. What do you make of this one, Idea Forge? Too much of excitement, or would you look to get in at some point of time?
Nigel, as you said, with this conflict in Israel, I think there is obviously renewed focus on defense stocks. This is not just defense because they are basically UAS, which is unmanned aircraft systems, largely drones. In fact, they made a presentation during IPO that one of the drone takes off every 5 minutes, if I remember correctly. Almost 50% market share in this, very, very strong player in this. And I think like it or not, I think the new reality is internal and external security, which I think will be very prominent also for us because they are indigenous and largely to India. Export portfolio still strong, and the kind of neighbors we had. So, but as I said, too much hype sometimes leads to wrong capital allocation. It's just that you have to be more careful in allocating defense. It will be in focus in the short term purely based on the sentiment around it. We have other stocks in the portfolio which we like in defense. We've been very lucky with Solar Industries, NHL, and a few more which we track, including one of the niche names, which is actually a combination of IT and others is Zen Technologies.
Okay, so Solar Industries and Zentech are your preferred bets in the defense space. Thank you very much for joining in, Gurmeet. IT season, earnings season is almost upon us. TCS, the IT bellwether, will be reporting numbers closer to 4:30ish, 4:15 onwards anytime. The company could be reporting numbers. Expect a muted showing in terms of a top line. Now, Q2 historically is a seasonally strong quarter for the company, but this time, because of the macro uncertainty, the top line growth will be restricted to about 0.8%. That's what the CNBC-TV18 poll throws up. In fact, the lowest estimate on the street is that the top line growth will at least be 0.5% on a quarter-on-quarter basis. The focus is going to be more on commentary, whether we will see some demand recovery in FY25, whether the management can provide some comfort on the recovery. That's going to be very crucial. When it comes to the stock performance, the stock has done well in the last, I think the low post the Q1 numbers was about 3,300. And from there, the stock has risen to levels of about 3,600. So the stock has done well. And this has been predicated on one, expectation of demand revival, and two, strong deal wins. So in this quarter, the company has won deal wins from JLR, which was an £800 million deal. So TCV is likely to be fairly strong. According to Kotak, it could be a number closer to $12 billion, higher than the management's own guidance of $7 to $9 billion. Margins are likely to show an uptick because in the prior quarter, it lost about 200 basis points due to wage hikes. So there is that typical recovery which takes place in Q2 versus Q1. Profits are seen up close to about 1%. And finally, watch for the buyback. The company could announce its fifth buyback. The street anticipates a buyback in the size of 18 to 22,000 crore rupees. And it could provide that support to the stocks even if the numbers disappoint. That's about IT. Tomorrow we'll have Infosys and HCL Tech both reporting numbers post-market hours. Dinshaw Irani, CIO, Helios Mutual Fund, is with us on the show. Dinshaw, afternoon. IT stocks have done very well in the last 3 months as the markets have largely consolidated. The index itself is up close to about 7-8%. Do you think stocks are priced in too much and there could be some disappointments in the earnings season this time based on the positioning?
Yeah, thank you for having me on your show and a very good afternoon to you and your viewers. Just a mild correction. I'm the CEO and not the CIO. CIO is Mr. Alok Bhal. So just to clarify that. Okay, sorry, I missed out on the question. It was about IT, was it?
Yes, IT and the way the street has positioned itself ahead of the numbers, given the run-up.
Right.
Does that make you skeptical then?
No, actually, IT, we've been fairly negative all along, and we continue to be so also. And in fact, our feel is that the hope has all been around whether there'll be a rate cut happening in the US or no, and that's because of that discretionary will come back into play. But given the recent announcement that higher for longer is what the way Fed is looking at, I don't think there's much hope there. Plus, what our feel is that the street is building in some hope for FY25, that the budgets will come back into place and things will look out. Actually, one quarter will not make a difference. December quarter onwards, you will start seeing the global players announcing their IT budgets. I don't think they'll move much of the ticket out there as such. So maybe CY24 will be not that great for IT. That's what our feel is. And probably from end of CY24 onwards, when things start working out, I think that's when you'll see. So probably CY25 and maybe FY26, to put it in that Indian context, will be the year to look forward for in IT. And before that, I don't think there's much hope here. Any of the valuations are pretty high still as compared to what the pre-COVID valuations were. And the growth rates are half of pre-COVID levels. So we continue to stay away from IT.
Okay. Dinshaw, hi, good afternoon. I know there's a lot of buzz at Helios, right? You guys must be very, very busy with the launch coming up. So looking forward to that. Let me actually ask you about your sector then. You've anyway been, big investors in, some of the marquee banking names, financial names. So what is it that you have your eye on looking into the future? I mean, any fresh purchases, insurance, asset managers, fintech players, beyond the usual blue chip bank names that we talk about? What else?
So basically, thank you for that question, Subi. But the fact is that we continue to be bullish on financials because that is where actually the growth comes in. I mean, in fact, we've been telling that whenever a GDP grows in a country, and the biggest sector to benefit is financials, because they don't only partake in the consumption growth, but also the capex needed for that consumption. So I think these two are the major pillars for finance, and both of them are kicking big in India. So obviously we are looking at not only say pure banks, private sector banks, we have some public sector banks also. We have mortgage companies in our portfolio too. So we are a mix of players. NBFCs, we have quite a few there also. So we always we're looking out for good names, new names to come in. But wherever the valuation is good, we'll probably be looking at those names as such. So continue to be on the lookout for this space.
Continue to be on the lookout for the space. What about consumer? Dinshaw, hi, good afternoon. As a overall kind of sector, again another space where Q2 will, I don't know. We put out data from Bizom for staples yesterday. It showed that Q2 numbers will be overall down, but September there was a big build-up in anticipation of the festive season, etc. So maybe October to December things may look a little better. But your thoughts, not just staples, but durables, etc. as well.
So, Prashant, thank you for the question. But staples, actually, we've not been too keen on that because we also believe that valuations is one area and valuations plus growth. So growth in staples has been fairly steady at 11-12% while the valuations have been stretched at 60-odd times forward earnings. So obviously, that's not an appealing space for us. Secondly, I think even in that space, given that the rural economy is fairly stretched right now, the government may look at coming out with a lot of SOPs for that sector. So maybe some growth may come into staples, but won't be exciting enough. It will just be a blip going forward. But as you rightly put it, discretionary is a space that you want to be in. And frankly, discretionary is, as I said, that this is what moves the GDP of the country, right? Unfortunately, our discretionary space is limited to around 300 to 350 odd million people, but still that space is going to grow. That population itself of the consumers is going to grow going forward. And obviously the purse, which is right now being allotted to discretionary spend, will also grow because your per capita GDPs are going to grow. So that's an exciting space to be in. But once again, we need to be cautious on the valuations front. We did see quite a surge in that space. We did, at a portfolio level, we did reduce our weight a bit. And when we saw some correction building in, we bought back a few names and got into a few newer names also as such. So that's one area that we continue to be overweight.
Hi, Dinshaw. Good afternoon. Dinshaw, what about the auto and the auto ancillary space? We were just discussing earlier in the show itself that some brokerages are giving some very sky-high target prices out there in autos as well as auto ancillary. How are you all placed on that theme?
So, Nigel, we actually are more keen on the ancillary space, and there also we being fairly selective. We don't want to go overboard on the ancillary part. But in the auto space, the main PV and two-wheeler and probably CV space, we not that gung-ho on that space. Mainly in the PVs and two-wheelers, it's mainly because of EVs coming in a big way. And also one has seen a lot of build-up of inventories because of the festive season. In fact, our internal analysis shows us that in the PV space, the build-up has been almost 4 weeks, which is fairly high when it comes to inventories in the PV space. So one may see that evening out over the next quarter. But besides that, we're not too keen on the space. And once again, I mean, the commodity prices are slowly becoming more stronger, so that may create a problem on the margin side. And obviously, in the CV space, we are playing it through a financier rather than through pure CV players. So that's where we are today.
Okay. Got that. Yeah, I guess we've been speaking to the dealers as well. They say the inventory buildup is because they're anticipating an absolute bumper festive season. So let's see if that's how it indeed plays out. What else, Dinshaw? What else are your teams looking at? Any new ideas? Any new interesting stocks? We haven't spoken about the new age guys of late, whether it is Zomato or Paytm. Zomato's had a brilliant run. So any thoughts there?
So basically, I won't talk about the stock per se. But the fact is that platform providers is one area that we were very keen on. In fact, not only in the fintech space or in the food delivery space, we also had one in the providing, I think, mainly tourism space, if I would put it that way, very eloquently. So that is one area that we've been keen on. And once again, we were very clear that these platform providers, they should provide you convenience, and that convenience should be encashable and it should be mass convenience. But they shouldn't be replicable, right? So that's the 4 things that you should look out for when you're looking at platform players. And obviously, in India, the market is fairly huge. I think all these guys have just scratched the tip of the iceberg right now, and there's lots left to capitalize on. So we continue to be bullish once again, yeah. But again, as I said, that we keep looking at opportunities. When we find that the run-up has been sharp, we trim a bit, and then we get back in again whenever the run-up goes off. So that way, so that's what we keep doing out here.
Okay, got that. I was trying to guess in my head when you said travel services. I wonder if it's Ease My Trip. Anyway, I know you won't answer on the individual stocks, but just a follow-up question. Sorry?
It's not Ease My Trip. No.
Okay, it's not Ease My Trip. I'll rack my brains further as we go through. But just to follow up on a serious note, what kind of valuation multiples are you now willing to ascribe to these companies now that most of them are either already profitable or very close to being profitable? In terms of valuing these companies, what's the kind of headroom you think that remains out there? No one's denying or debating the opportunity. It was always about profits and value.
So it's actually about the potential. So here, actually, if you go to see on the DCF front, they're doing fairly well as such. So that's not a problem at all. But the fact is that on an overall portfolio basis, so you can always have these one-off bets where you know that the giving a justification valuation won't be there, but as long as the alpha is good out here. So on an overall portfolio basis, what you try to do is control the peg of your portfolio. And that's what we try to do out here, and try and keep our peg below 1, because that's where the real alpha generation comes in as such, if you are managing to do so. So I think that's how you should be looking at your overall portfolio. So obviously there'll be 1 or 2 stocks within where there will be a stretch on the valuations, but then you can live with that for a short period of time, or say a medium period of time, given the potential going forward.
No, absolutely. Got that. We'll leave it there. Thank you very much for coming on, as always, Dinshaw. It's a pleasure having you with us here on CNBC-TV18. We'll take a very quick commercial break here. We'll come back with more on markets, which are holding on nicely. I mean, actually, a little bit more in terms of gains. We started around 19,805, 19,810. There's about 10-15 points more since. And I think the Nifty Bank, at least, is not selling off at all. From the time that we started, maybe it's put on a little bit, just a little bit, but on the upside, not downside. We'll come back. We'll get you what's happening in dealing rooms with D Street Chatter. Nimesh, of course, will get you that intel a little later. We'll get you what to buy or sell today for a reverse trade tomorrow. Stay with us.
You want to talk business? Meet me in the On-Board Lounge.
Genius! सोया अच्छे से?
अच्छा लगता है जब कोई हमारे बारे में सोचता है।
सुन, जाकर सो ले थोड़ा, मैं उठा दूंगा।
तो गुड मॉर्निंग ही नहीं, पूछिए, डिड यू स्लीप वेल?
Woven by legends, stitched by traditions, the heritage of India is a festival of creativity, innovation and progress. Hyundai is proud to be a part of this celebration. Hyundai Ioniq 5, power your world.
21 रन से इंडिया जीतेगा। है? लिख के दूं क्या?
अरे क्या लिख के दूं क्या?
अरे जब मेरा फ्लेयर वुडी इतना मस्त दिखेगा तो लिखने के बहाने ढूंढने पड़ेंगे ना। फ्लेयर वुडी पेन, क्या दिखता है, क्या लिखता है, लिख के दूं क्या?
वीरू, ट्राई करो, सॉल्व कर सकते हो इसको?
मुश्किल है ये।
बिल्कुल, और इसी तरीके से कई लोगों को फ्यूचर्स एंड ऑप्शंस भी एक पजल जैसा लगता है।
तो चलिए अभी कर देते हैं इस प्रॉब्लम को सॉल्व।
CNBC आवाज आपके लिए लेकर आ रहा है F&O गुरुकुल,
जिसमें शामिल होंगे दिग्गज ट्रेडर्स और F&O के एक्सपर्ट्स,
और जो अपने सरल भाषा में आपको समझाएंगे फ्यूचर्स एंड ऑप्शंस से जुड़ी हर बारीक बात। तो कर लीजिए खुद को फटाफट रजिस्टर और ना जाइएगा ये डेट भूल।
Welcome back. I think you just need to focus on two aspects now. HDFC Bank, pull up the intraday chart out there, and the Nifty Bank. You know, if you get a split screen coming up of HDFC Bank as well as the Nifty Bank, it'll tell you why we're moving to the high point of the day. So the intraday chart comes up for you on the screen, and that explains why, in fact, we are moving up. HDFC Bank has perked up a little bit. That's what's helped. The other couple of stocks that have done well from the Nifty, Grasim as well, has moved a little bit higher in the last few minutes. And SBI Life is the other stock that we're looking at here. That's the chart that we're talking about. HDFC Bank moves to the high point of the day, helps the Nifty Bank as well. Remember, resistance for the Nifty Bank comes in at around that 44,700 odd mark. So good going on that aspect. What's preventing us from moving higher? TCS, little bit under the weather. TCS has moved a little bit low. And I think another big boy pull up, Reliance Industries. Let's see what that one's doing on the charts, because that's another big mover. It's up close to around 1.5%. I think in the last 20 minutes or so, Reliance Industries as well has perked up a little bit, up close to around 1.5%. Yes, that's the other big boy. So HDFC Bank and Reliance Industries, both of them spiking up in trade. But a good time to get a check into D Street Chatter. Nimesh joins us to tell us what is he picking up in terms of dealing room action. Nimesh, what's it?
Well, another strong day, Rigel, and again backed by institutional activity. So I spoke about that yesterday as well. Yeah. There were market at close buying interest as well. Even that seems to be the case today as well. So largely large cap driven is the overall feedback as far as flows are concerned. But again, from a technical point of view, we are now closer to the upper end of the band of around 19,800, 19,850 levels. So there you're going to see some resistance as well. That's the technical feedback. In terms of flows, again, as I said, cement looks good. There is a bit of buying interest back. Autos have since a bit of bidding interest as well. And for a change now, there is a bit of interest in the FMCG names as well. So maybe a bit of rural impact, or so to speak, or maybe because of earnings. I think there's a bit of interest in the FMCG basket as well. I guess from here on, quarter two earnings will be very important. We've already seen some bit of reactions into individual names. But I guess TCS results today will be very important for not only IT pack but generally for the quarter 2 earnings. So earnings will be an important trigger to watch. But I guess from a flow perspective, it's still positive from the larger FIs and largely into the large cap names.
Okay, all right. Let's get stock specific then, Nimish, because plenty of stocks are moving around. Right. What have you picked today?
Well, there are a lot of stocks which are buzzing in trade in the broader markets. The first stock on my list today is Welspun Corp. That stock is buzzing in trade today in good volumes. I understand the HR activity is quite high in that stock as well in today's trade, and there is a strong indication of a large order win for the company very soon. So that's the reason why that stock is excited in today's trade. So the first one. The second stock is HDFC Bank. Nigel spoke about a bit of spike in that stock in the last half an hour of trade. In fact, from a flow perspective, the feedback is there are first signs of some bit of selling exhaustion in HDFC Bank from the larger FIs. They've been constant sellers. Looks like that is largely getting over, and there are small buy flows as well from larger FIs in HDFC Bank in today's trade. So that's the second one. The third stock is Mahindra Logistics. This is interesting, right? In a bull market or in the mid cap and small cap, this stock is relatively underperformed. Y2D, the stock is on 30-odd%. This month, the stock is on 10-odd%. I understand there is a selling pressure going on from a large FI. They own close to 4% equity. They've been constant sellers. Looks like it's likely to come to an end very soon. So something to track going forward. But the stock is largely underperforming on the back of FI selling. And the last one is Karnataka Bank. Again, consolidating in range of late. But the indication is maybe the QIP is round the corner, and the bank may raise money via QIP very soon.
Okay, well, Nimish, thanks very much. That's an interesting list. Karnataka Bank, Mahindra Logistics, HDFC Bank, and Welspun Corp are the 4 names that Nimish put out. Well, Mitesh is with us with what to buy or sell today for reverse trade tomorrow. Mitesh, good afternoon. Looking good despite the slight hesitation on the Nifty Bank. A quick view on the Bank Nifty and then your trades.
Yeah. So, Prashad, I talked about buying the Bank Nifty about half an hour back when it was closer to about 44,400. I think that is where intraday averages come in. And as long as we are above this 44,400, 44,350 zone, good chance that we'll hit 44,700 again and even try to get past 45,000. So maintaining a positive stance. And on the stock side, I have a BTST on Hero Motors. Keep a stop at 30.80. Look for targets of 31.30. And HUL, is the other one, reversing after a few days of decline. HUL is a BTST with a stop at 25.40 for targets of 25.85.
Okay, got that. Mitesh, thank you very much for the trading calls. You have a good afternoon. We'll see you again with the market tomorrow. Let's now move on. Sunteck Realty is in focus on the back of a brokerage note. Jefferies raised the target price on the stock. It is quite optimistic about the developer's growth prospects. Sonal is here with the details. Sunteck's up 4%, put up a 1 year, and we'll see how that stock has been flying around. What exactly is making Jefferies bullish, Sonal?
Well, their partnership with IFC is what's making Jefferies very bullish. They've increased the target price on the back of that to 555 rupees a share versus 415 rupees a share. Their tie-up, as I said, with IFCs in the affordable and mid-housing segment is what Jefferies like. They call it a booster, and 75% of Sunteck's portfolio is geared towards this segment, which will accelerate growth for the company. The reintroduction of interest subsidy component of the popular Housing for All scheme of the government seems to be reintroduced, and it is likely soon, so that could be a booster as well. Sunteck already has a significant mid-income affordable residential focused land bank, around 30 million square feet. So that's a big land bank that they have here, and they can actually develop that and could see a boost from the upcoming demand. Deal with IFC comes as a governance boost for the company, according to Jefferies, and that's why they are bullish on the stock.
Okay, let's also put the focus on, Sonal, thanks very much for that. Keystone, right? That's Rustomjee. That's a stock which is higher in trade. You know, since listing, it's not done very much, actually, over a period of time. We spoke with the management, Bowman Rustam Irani, Chairman and MD of Keystone Realtors. He expects huge festive demand for the sector in the third quarter, and he expects that to carry over into Q4 as well. Listen in.
The first half of the year has been extremely good. We would have actually galloped a little more, but it's nothing to do with the demand at this moment in time. Our project launch, which was due to be in this quarter, got slightly delayed because of certain approval processes, and we're looking at launching it now. So we will actually more than make up for what we've lost in terms of time. But yes, that is what led to some amount of decrease in our pre-sales in the quarter two. this is the quarter in which you will see a huge festive demand coming in, and that will lead to a great amount of sales taking place, not only at our end, but across real estate developments in various parts of the country as well. And we are very, very hopeful that our new launches, which are there in the pipeline, which, like I mentioned, one of them got delayed in this quarter, will have us having an excellent quarter coming ahead of us, as well as the last quarter of the year. Also, we have some interesting launches.
All right. Well, Mayuresh Joshi is joining us. Mayuresh, I'm going to ask you about the real estate stocks, but for the time being, I think we need to focus on some of these IT names. The IT index itself should come up for you on the screen, because quite a few of these stocks have moved to the low point of the day. Remember, we have TCS's numbers later today, and also we'll be watching out for the commentary. But the IT index has moved to the low point. HCL Tech has taken a bit of a plunge. Infosys has dipped a little bit, and TCS as well has dipped a little bit. So the index on the whole has moved lower. Street getting a little bit nervous, I think, ahead of these numbers. Mayuresh Joshi, as I said, is with us. Mayuresh, first up on the real estate stocks, what's the view out there? We had a Baman of Rustamji who's joining in today, and he said second half of the year is very, very good. A few days ago, we had Prestige Estates who went ahead and they increased their guidance to 20,000 crores. How do you view this sector? Because some of these stocks, they're at multi-year highs.
Afternoon, Nigel. Oh, absolutely. I think 2-3 things which are happening, which is very positive for the sector as a whole. One, I think the unsold inventory for the sector across pockets is coming down steadily, specifically in the post-COVID era. So that's a huge, huge positive. The second angle, obviously, is the pre-sales velocity. So I think any new launches that are coming through are getting absorbed pretty well. And that probably adds to a lot of value in terms of consolidated cash flows that a lot of these listed developers get. And third, in terms of their existing inventory as well, of new launches and the expectations in terms of cash flows coming in from that over the next few time periodicity, if you bucket that up in 3, 6 months, 9 months, and a year, it seems pretty good because of the kind of footfalls that you're probably getting. Relatively, I think South-based players react more in terms to how the IT sector probably performs. The best part of India is probably far more stable in terms of demand dynamics. And therefore, the expectations of the sector expected to do well with festivities around the corner. And assuming that you're in the mid-cycle of a 5 to 7 year property boom period, I think good times in terms of consolidated cash flows can continue for the sector as a whole. So Godrej Properties is making a very nice base as we see it in markets with India. DLF is showing significant signs of good traction as far as numbers is concerned. And so is a Prestige down in the south. So a little bit selective out here at markets with India, but Godrej Properties is something that we will keep on our buy watch list, and DLF and Prestige, one can continue to hold these stocks.
Okay, all right, got that. Mayuresh, stay on. We'll have more questions for you in just a bit. Lakshmi Organic is another stock that's been on our radar today. It's been buzzing after a QIP through which they raised some funds. Sonal is back with us. Sonal, how much did they raise? What are the numbers looking like?
Well, 260 crore rupees is what Lakshmi Organic has raised via their QIP, and the fact that a lot of mutual funds have shown interest, they've participated in this QIP, is something that the street likes. So 45% or 48% of this QIP money has actually been taken up by ICICI mutual funds, the different fund segments, so to say. And the other investments also include interesting names like Turnaround Opportunities Fund, 361 Equity Opportunities Fund, there's Ashoka India Equity Investment Trust, Society General, Autumn Investment and Infrastructure. So some handful of good names that have invested in Lakshmi Organic, and it is coming in at a time when the stock has been underperforming. Yesterday it's up, but it's fallen around 58% from its peak. The high earlier was around 628 rupees a share. It did see good listing gains, but since then it has not been doing very well, and that's why there's some support that has come by. More institutional holding in the stock also is something which the street likes, and that's why that green on Lakshmi Organics is what we are seeing today.
Okay, yeah, absolutely. Let's put up a one-year chart of Lakshmi. I mean, it's not the only one. In general, chemical stocks have had a pretty rough ride last few months. We'll get the 1 year up for you. There we go. Very volatile and bouncing from deep low levels of about 220 thereabouts. Mayuresh, not sure if you track this company. Give us your view if you have one. Otherwise, overall chemicals, I mean, would you be a buyer considering this is one area of the market which hasn't run up in the last couple of months?
Afternoon, Surabhi. Yes, I think it has been a large underperformer, but it was one of the major outperformers during COVID times. Obviously, the kind of destocking that is happening, the Chinese oversupply into the markets is pushing a lot of these bulk commodity chemical prices down substantially. And even the niche chemicals, they are probably getting hit because of lower demand. So I think we'll remain a little bit more selective in this space itself. AMI Organics is one stock that we probably will still keep on our radar. 2-3 very interesting things that are happening for the company as a whole. Their specialty product pipeline or the specialty chemical pipeline is improving at a very decent pace. Obviously, I think agrochemicals and pharmaceuticals, where they supply a bulk of their product suite, is expected to grow decently. Maybe a couple of quarters pain for the sector as a whole, but it should start bouncing back quite smartly. Even for Lakshmi, as an example, the ethyl intermediate market, which is almost 55% of their overall revenue, and specialty intermediates, which is 45%, it's been struggling over the last few quarters. So I think even if demand starts to pick up, which it should in the next few quarters, I think numbers might just be a little bit on the softer side. Margins will show signs of improvement for players as a whole, with input cost deflation that we have largely seen. But to a large extent, I think we'll remain extremely selective, even if valuations remain attractive. We'll wait for 1 or 2 quarters of turnaround. Till that point of time, AMI Organics probably remains one of the stocks within the space.
Okay, Mayuresh, stay with us. We'll take a break, but we'll also kind of leave you with some sound bites. Morgan Stanley's Chetan Iyer was on the show in the morning with my colleague Lata. And the conversation was around the rise in US yields and the impact on Asian emerging markets. Listen in to that. We'll take a break. We're back.
Asia's inflation outlook has been still quite comfortable. We don't think that the central banks in the region will be able to cut interest rates when the US rates are rising up, or the dollar is strengthening too much with Fed rate hike expectations going up. So that's the reason why we have most of the region's central banks, which are about to be able to cut rates, will delay till second quarter of next year. Now, RBI has been sort of more focused on the domestic inflation, but it's very clear that somewhere in the back of the mind, the developments in the US rates and the Fed policy outlook is weighing on RBI's mind as well. We are not expecting oil prices to go up in our base case, but if it does go up because of these geopolitical tensions, I think it will definitely complicate the monetary policy management in the region. And so in that scenario, while I mentioned our base case, we are not expecting rate hikes. We're in fact expecting rate cuts to be happening, though in a delayed manner. In this risk scenario where oil prices shoot up, we will see that there is a possibility that some of the central banks may have to take up a rate hike. In the US, we are expecting growth to slow from the fourth quarter, this quarter itself. So we are expecting consumption slowdown and overall growth slowdown in the US. In the context, this recent real rate rise has only added to that downward pressure because the US economy is funded to a large extent with long tenure borrowing rates. And so therefore, we think that case that we have in our base case that there will be a slowdown is only getting more confirmed.
Higher interest rate of up to 7.5% on savings account from RBL Bank. Visit rblbank.com or your nearest branch to open a savings account today.
Celebrate this festive season with BMW Joy Days. Bring home the BMW iX at a celebratory offer of rupees 89,999 per month at a low interest rate of 4.99%.
21 रन से इंडिया जीतेगा। लिख के दूं क्या?
अरे क्या लिख के दूं क्या?
अरे जब मेरा फ्लेयर वुडी इतना मस्त दिखेगा तो लिखने के बहाने ढूंढने पड़ेंगे ना। फ्लेयर वुडी पेन, क्या दिखता है, क्या लिखता है, लिख के दूं क्या?
वीरू, ट्राई करो, सॉल्व कर सकते हो इसको।
मुश्किल है ये।
बिल्कुल, और इसी तरीके से कई लोगों को फ्यूचर्स एंड ऑप्शंस भी एक पजल जैसा लगता है।
तो चलिए अभी कर देते हैं इस प्रॉब्लम को सॉल्व।
CNBC आवाज आपके लिए लेकर आ रहा है F&O गुरुकुल,
जिसमें शामिल होंगे दिग्गज ट्रेडर्स और F&O के एक्सपर्ट्स,
और जो अपने सरल भाषा में आपको समझाएंगे फ्यूचर्स एंड ऑप्शंस से जुड़ी हर बारीक बात। तो कर लीजिए खुद को फटाफट रजिस्टर और ना जाइएगा ये डेट भूल।
Welcome back. Clearly, there is some sense of nervousness getting into these TCS numbers. LTI Mindtree now is the stock that has slipped. It was holding in the green just till around 20 minutes or so ago. Now that's moved into the red. HCL Tech, we already highlighted, had moved lower. And a couple of other names as well. I see Tata Steel as well has slipped a little bit. So there is some kind of selling that we're seeing at higher levels. We're holding around the 19,800. Remember, the start of trade, we were around 19,770. So in that sense, from where we started off, we've not moved too much. Let's see how this goes. And the Nifty Bank as well is unable to get past that 44,500 odd mark. Mayuresh Joshi is still with us. Mayuresh, IT stocks, they're looking a little bit nervous. Could you revise with us? What do you have in your portfolio? And what do you think that will look good from here?
So Nigel, as a disclaimer, on our global focus list, we have stocks like a KPIT and a Persistent, but we bought them at very low levels. So no fresh buying at these current levels. Obviously, I think the nervousness that is coming through is with the expectations that the management commentary might be a little bit weak surrounding IT stocks at this juncture. Obviously, deal wins have been quite fabulous. TCS, Infosys, HCL Tech have all reported good deal wins in the past few weeks. But I think a lot of pressure points that are coming in. And as we speak to our US counterparts, I think the expectation is that orders will start slowing down. The other element is also pricing can start coming back to haunt these players if a slowdown is imminent in the next few quarters. And that can probably have a say in terms of how next financial year numbers will play out on a good base that they will create in the past 2 years. So I think all depends on the execution of numbers and the commentary thereof. But as a disclaimer, as I said, we have KPIT and Persistent, but they are at lower levels.
Mayuresh, have you looked at this company called Mishra Dhatu, Midhani? They're into metallurgy and, a lot of defense companies supplying to ISRO for a long time. It's a PSU, but, prospects look good. We had them on the program. I think it's almost been about more than a fortnight, maybe almost a month now. Outlook looks pretty good.
It seems to be the case, Prashant. And for all these stories, including Midhani, I think the structural part in terms of buoyant order books obviously stay. So from a structural perspective, over the next 5 to 7 years, with order books expected to increase even further in the next few quarters, a large part of the take that probably happens is operating leverage will play out because all these orders are coming with a reasonable amount of margins. Now, the other interesting aspect for a lot of these companies, Prashant, will be the fixed asset capacities that they've probably got to execute the current order book. And that is to a large extent limited unless they expand their fixed asset capacity to a large extent over the next few quarters. To suffice these order books sufficiently within the timelines might be a difficult ask. And therefore, I think the kind of numbers expectations with the next 2 to 3 years in perspective, even if you roll over at the utilization levels, at maximum utilization, probably justifies the price that they're probably leading into. So yes, momentum has been there for all these stocks, but we are not ambitious, probably chasing these stocks.
All right, Mayuresh, what about these couple of names, Oil India as well as ONGC, the proxy plays to, to oil, but also there is gas out there which they're trying to ramp up. Both these two stocks, as we speak, have moved to the low point of the day. I think market watchers will be very happy if Brent crude prices dips further from here. But what's your view on both these two? ONGC and Oil India, they have some valuation support, they have some triggers as well. But what do you think about them?
Absolutely, no two ways about it. Valuation support is there. The dividend yield is fabulous, Nigel, for both these stocks. But again, I think it's an entire play in terms of how oil prices will move. Over the last few weeks, VN Markets with India have met a few of the local and global oil experts, and we have spoken to them as well. And a large consensus is expecting oil to probably stay for a larger part. The short-term variations can push oil with an upside risk with what is happening geopolitically. But they are expecting it to remain between 80 and 90. And as a larger push happens towards greener, renewable sources, I think that margin will probably trend towards the lower end. So I think structurally, I think these stories probably are pricing in to a large extent oil remaining at lower levels. And to that bit, government policies, regulations, geopolitics obviously rule these stocks. So I think we generally tend to stay away from these stocks because of such news flow, which can impact the stock prices over short to medium periodicity.
Okay. By the way, some interesting moves on a couple of IT stocks as well. KPIT Tech is having a very good session, 5% higher. Then there is Tanla Platforms, which is more of a mobile play, about 6 to 7% up on this one as well. Before we sign out, Mayuresh, your thoughts on midcap IT and some of these product/platform-oriented companies. They've had a great run. KPIT, of course, is one of them. Any views here? Would you look to buy?
Well, as I said, as a disclaimer, we maintain, we do have KPIT at lower levels, and therefore we are holding on to the stock. The expectation largely is that the commentaries have been very good. The kind of deal wins and client wins that they're winning in the R&D space will continue. The stickiness with customers and the expectations in terms of margin performance being extremely robust might continue for a player like a KPIT. Obviously, valuations have gone through the roof at this juncture, and therefore anybody who's riding the momentum can definitely ride on the momentum. But in Markets with India, I think one space that we are liking, just to wrap things up, is the road construction players. I think a lot of these players will do exceedingly well, in our opinion, in the next few quarters. A lot of government focus and initiatives that are surrounding this space, with the intention also to clear and complete a lot of road projects in the next few years. I think this space can look very, very interesting. KNR, BNC probably remain.
Okay, all right. Got that. Mayuresh, thank you very much. We'll wind it up on that note. Indeed, it's actually been a good day for a couple of these smaller mid-cap, small-cap companies on the technology side. RateGain is actually one of them as well. RateGain has been up about 4% today. So interesting stock picking going on in the mid-cap market. With that, let's start winding up the day. The mid-cap index has managed to retain a gain of 0.5%. Not as much as what we saw in the first half of the session, but nonetheless, it's not been bad. But I'll start with the large caps. Nifty up 114 points, retaining quite a bit of the advances, but not close to the highs. There was a little bit of a cool-off, no denying that. So the big winners, Hero Moto, thanks to that CLSA note, 4% higher. There's been a couple of the heavyweights like Lever and Reliance. They've contributed 1.5% on HUL, 1.5% on Reliance as well. And we've seen some chipping in from HDFC Bank. Overall, the bank Nifty cooled off a bit, but HDFC Bank stood tall, as did Kotak, about 1% up over there as well. Bharti Airtel, ITC, these were some of the other contributors. A fairly diverse set of stocks that led the Nifty higher today. The cool-off was on some tech names, HCL Tech, TCS going very quiet into numbers, ditto for Infosys. So this is where there was a fair amount of caution. Nigel? Oh, okay. I don't think we're through to Nigel. But Prashant, overall, I guess the bulls will be happy with this kind of performance. Not quite at the top of the day, but at least consolidating yesterday's move.
Yeah, absolutely. Except the banks, right? The banks index, intraday range is 300 points and we end 150 points higher. So there was a lot of give back from the day's high. Actually, even the Nifty, it's a good outcome, absolutely no doubt about it. But the fact is, you're not very far away from, where we started. So I think we cannot build on the gains in any substantial way. The high was 19,840 and some 40 points were given back by close. The adjusted close should come up in just a bit from now. Just a few losses which came through. There's, of course, Bank of Baroda, the PSU banks like Central Bank, IOB, etc. stood out on the downside. There was ICICI Pru, which lost a little bit. JSW Energy quick heel, which has had a fantastic run in September and has continued into October as well. Zaggle, the new listing, which has done very well, is just, 10 days old in the market. Crisil, Coromandel were some of the others which came off a little bit overall in the market. But all in all, I mean, it's a pretty decent kind of day. Later today, we have the Fed minutes, which I think will be top of mind. But the more important thing, of course, will only be disclosed tomorrow, which is the monthly inflation numbers. That's, I'm talking about the US and what that implies. So we end with 100+ points on the index. We'll take a very quick commercial break here. We'll come back. There's more coming up on the other side. We'll put the focus on that big upgrade that we highlighted early on in the morning. CLSA's global team flipping. They were underweight. They accept they made a mistake, stayed bearish for far too long, and now they're overweight. We come back with that.
Powered by LIC, हर पल आपके साथ. In association with Emirates, fly better.
दौड़ना किसे पसंद है, और वो भी बिल पेमेंट्स के लिए तो बिल्कुल नहीं. इसीलिए एक्सिस बैंक की ओपन ऐप करिए सारे बिल पेमेंट्स यहीं से. पतंग के लिए तो दौड़ना पड़ेगा.
ओपन बाय एक्सिस बैंक, सिर्फ आपके लिए.
टिप चाहिए, पैसा लगाना है तो सेंचुरी प्लाई क्लब प्राइम पे लगाओ. डूबेगा नहीं, जलेगा भी नहीं, कोई खा नहीं जाएगा, धोखा नहीं देगा, ऊपर नीचे भी नहीं होगा, सेफ रहेगा और मिनिमम 30 साल का रिटर्न देगा. अब इससे बेटर इन्वेस्टमेंट है तो बताओ. सेंचुरी प्लाई क्लब प्राइम, रहो बेफिक्र.
This is TV18 and you're watching CNBC-TV18.
Okay, well, markets are closed 100 points plus on the Nifty. But we started this morning on a positive note, not just because of what the US market handed off to us, but there was a brokerage upgrade as well. CLS's global team has turned overweight on India. Nimesh, of course, has been highlighting and putting the spotlight on the note details and what they think are great buys from here. So let's bring him in. Nimesh, take us through the details.
Incredible India. That's the big report from CLSA, wherein their global strategist Alexander Redman has today double upgraded India to 20% overweight versus 40% underweight earlier. Now, today in his note to the clients, Alexander said, and I quote, "Our previous country in underweight position on India worked between late of October 22 to March of 2023. But ultimately, we persisted for too long with our negative view, and that's going to change." While they have raised some concerns, they find 8 key drivers for India to upgrade to a 20% overweight now. So let's look at what's working for India's favor. They've identified 8 big triggers, which Alexander has highlighted in his note as well. The first being the rebounding of credit impulse, signaling a robust equity momentum. That's the first big trigger for them. The second trigger is more manageable energy pricing given the discounted Russian crude. So crude is going to be controllable going forward. Third, improving balance of payment and likely bond inflows that will support the rupee in the medium to long term. That's the third trigger. Fourth, India is going to be the strongest economic growth across all the emerging markets, and that will drive equity markets as well. Fifth, equities are still trading at a fair value, and their model suggests a further 22% upside from current levels. Sixth, a return of superior relative profitability metrics across emerging markets versus India. So that's a big driver for them. Seventh, a breakout in the EPS growth, which is strongly supported by a strong GDP as well. And last but not the least, the FI positioning. The FIs are still not overexposed to the Indian equities. However, they've raised some concerns as well. The first big concern is valuations. India's valuation relative to the emerging market peers looks unappealing at this point in time. And two, the RBI monetary policy inflexibility. So these are a few concerns as well. While CLS is so bullish, they've identified 10 big stocks, which quality names in India, where they have a high conviction call as well. So the first name is Reliance Industries. A couple of other names includes Bajaj Finance, HDFC Bank, L&T, ICICI Bank within the financial names, Axis Bank as well, Bharti Airtel, ONGC within the PSU, SBI they're betting on, and Tata Motors. So these are the top 10 conviction calls from CLSA. So the big call from CLSA is from a 40% underweight, they have now turned 20% overweight on India, and they're betting big on India as well.
Interesting. Okay, at least they're They're saying it like they see it now. Well, let's move on. ITC Chairman Sanjeev Puri is optimistic of better demand going forward. In a conversation with our colleague Yash Jain on the sidelines of the vibrant Gujarat curtain raiser event, the president designate of industry body CII also talks about the pickup in private investment and overall health of the economy. Listen in.
As far as ITC is concerned, we commissioned 5 manufacturing facilities last year. There are 3 more in the pipeline. And when I say 3 more, these are under various stages of construction. One of them will be inaugurated within the next 12 months. So we continue to invest, and this is just an example to say investment is happening. Overall, the CII business confidence surveys also show that there is optimism. Capacity utilizations are above the 75% level, and that augurs well for fresh capacity to come in. The macros also are favorable because there have been a lot of good, purposeful policy interventions that the government has taken in the past, and there is ample liquidity. Corporate and financial sector balance sheets are better. Corporate income tax are also being rationalized over time. So all these are very conducive to investment. And the domestic economy continues to perform well. We've heard the recent reports about global institutes also acknowledging that. What is weighing on some of these sectors is certainly the global situation, where there is a significant compression of demand and exports are under pressure. So that's really the issue that may be holding back in certain sectors. But generally, we are starting to see the green shoots of investments and capacity utilizations are up.
One last question. As far as, we have multiple triggers lined up ahead of us. There is, of course, the large election that we have next year. Apart from that, monsoons have just gone by. What is the feedback that you're receiving in terms of monsoons, and especially in the context of that, rural demand for a company like ITC? And before elections, what does the demand scenario look like? How would that pan out?
So as far as rural situation is concerned, I think given that the monsoon was better in September, I think the situation is much better. And we are already seeing some green shoots of pickup. I think with the passage of time, with a good crop, good harvest, I think the demand should pick up from here further. So I am optimistic. I think the festivities also should help. So I would remain certainly optimistic that over time it's going to pick up.
Okay, well, that's an optimistic note being sounded by the ITC chief. The Indian automotive industry is excited. It sold a record number of cars and SUVs in September, and companies hope this momentum will carry through into the festive months as well. CNBC-TV18's Danish Anand reports that many are planning both new launches and facelifts to existing models to give consumers something to look forward to. Take a look.
Facelifts to the Tata Nexon ICE and EV variants, special variants of the Kia Carens X-Line and Seltos, souped-up versions of the Honda Elevate and the Hyundai Exter, and all new vehicles like the Mercedes GLC and EQ E500 4MATIC SUV, the BMW iX1, the Audi Q8 e-tron, the Triumph 1200, the TVS X and the TVS RTR 310. India's auto sector has been buzzing with activity to shore up product pipelines over the last 2 months as it prepared for the 4-month-long festive season which started in September. The results in September have been solid, with average sales growth at 10%, and the sector is enthused.
As a dealer community, as dealers, we are pretty optimistic about the upcoming festival season. And we already saw in September passenger vehicles creating an all-time high for the individual month of September. So every month a kind of a new record is being created for auto retails. And we have also seen consumers coming out during festival seasons with all their savings and really encashing on their muhurats and auspicious days to buy vehicles. So overall, we are expecting a very and overall 95% of the monsoon has covered well across India, and with a decent crop also, everything seems good for the upcoming festival season for auto industry.
As Diwali approaches, more facelifts are on the anvil. Tata Motors is expected to launch a facelifted version of its popular SUVs, Safari and Harrier. Maruti Suzuki, meanwhile, is confident it will sell 5 lakh units during the festive season, and Hyundai Motor India is fairly certain of record sales.
The demand is very robust, and if you see Onam, we had a growth of about 9 to 10% in sales. Even in Ganesh, we had an increase of about 9 to 10%. We feel that the momentum is robust, and this festival is very different from last 2 years because the stock levels are very optimum, 20 to 25 days of stock. We are in a position to really give more and more deliveries to more and more customers. We feel this number of 9% we can expect going forward in the festival season as well. If you see January to September, Hyundai has grown by 9%. We feel October to December also somewhere around 8.5-9% is a reasonable growth to expect. And we should end this year with the 8.5 to 9% growth over last year, which was the highest ever year for us.
This also means one can expect offers and discounts to woo customers. Auto dealers say that on an average, cars are being sold at an 8% discount. Luxury car maker BMW has launched schemes offering better EMIs at lower interest rates, and Mercedes-Benz is offering complimentary insurance with better financing options. They say as the season progresses, more such offers will hit the showrooms. In New Delhi, with video journalist Rajendra Singh, this is Danish Anand for CNBC-TV18.
All right, let's move on then to some other stories in focus. Global energy markets have seen sharp volatility. That's the word coming in from the global head of Bain and Company. Sonal was in conversation with him about a whole host of issues. Peter Parry, chairman of Global Energy and Natural Resources at Bain and Company. She started off by asking him about the challenge of delivering energy at reasonable prices. Here's a slice of that conversation.
Yeah, hello. It's a great pleasure to join you, and a privilege to engage in this discussion. As you say, it's a changing time. It seems always in the energy markets where the pressures on producers and consumers alike are likely to vary from time to time. We've had some significant disruptions in the energy markets in recent times. We are currently in a period of relatively high commodity prices, and at a time when the world is putting more and more attention on energy transition as well. So that twin agenda of delivering energy at a reasonable price and at a secure supply source in a time of change and lower carbon is a big challenge.
Okay, so when you talk about more companies talking about transition, that of course is a challenge as well because of the times that we are in. But do you think these companies in India or abroad talking about this transition have the right talent to do it? Is that something that'll prove costlier, higher technologies that we are talking about? What kind of costs will they have to incur?
Well, it's a combination of factors, of course. The availability and supply of the right talent in a very fast-growing industry situation is always going to be a pressure. If you see some of the clean energy technologies growing at 10, 15, 20% per annum, the supply of new people into those industries at that rate is very hard to sustain. So the war for talent or the competition for talent is intense, but the opportunities are there as well for entrepreneurs and careers to be developed through the cycle of the next 5 years. So yes, talent is a real key challenge. Working hard to bring new people into the industry, to bring the best and the brightest who can help us evolve the industry very quickly is going to be a key.
Okay, so talent continues to be the key focus. The other is investment in sin technologies or this new energy, so to say. Do you think those are high return generating assets, or do you think they will be, it could be questionable when it comes to returns on such assets or such investments?
Yes, and we're largely talking, and not entirely, but we're largely talking about technologies which are going through rapid change. In order to enable those technologies in renewable power generation or in hydrogen or in biofuels, etc., to deliver the kind of returns that investors want to see, we're going to have to see those technologies improving 3 to 4 percentage points a year, either in terms of the cost per unit of energy output or in terms of the efficiency of those technologies in place. So we are against a backdrop of inflation We're against a backdrop of rising interest rates or high interest rates. And so the need for continuing to push technology evolution is fundamental to deliver the right kind of returns.
All right, we'll slip into a quick break here. We'll come back with more on the other side. Stay with us.
टिप चाहिए, पैसा लगाना है तो सेंचुरी प्लाई क्लब प्राइम पे लगाओ। डूबेगा नहीं, जलेगा भी नहीं, कोई खा नहीं जाएगा और मिनिमम 30 साल का रिटर्न देगा। अब इससे बेटर इन्वेस्टमेंट है तो बताओ? सेंचुरी प्लाई क्लब प्राइम, रहो बेफिक्र।
Money Control Mutual Fund Summit. Path to 20 crore investors. Powered by Axis Mutual Fund.
इक्कीस रन से इंडिया जीतेगा। लिख के दूं क्या?
अरे क्या लिख के दूं क्या?
अरे जब मेरा फ्लेयर वुडी इतना मस्त दिखेगा तो लिखने के बहाने ढूंढने पड़ेंगे ना। फ्लेयर वुडी पेन, क्या दिखता है, क्या लिखता है, लिख के दूं क्या?
Welcome back. Now, in our special offering, CNBC TV18 Conversations, Lata caught up with Peter Quote, the Chief Technology and Strategy Officer at Siemens, and began by asking him about Siemens' preferred sectors for investment in India. Take a look.
For one, there is, as you mentioned, there is the whole railway industry and the electrification, which obviously is dearly needed. The second part is infrastructure, and it's about smart infrastructure. It's about buildings, grids, enabling the decarbonization of the economy. And the third one is all about the industrial sector. So really bringing green and competitive companies that are on a global scale that can expand the reach of India.
Okay. Well, all those are needed for us, stopping emissions. But I was captivated by something that you all said in your Innovation Day, that you are into e-fuels. And if the internal combustion engine cars used e-fuels, then they don't really have to die away. They don't have to be replaced. Is that a very promising technology?
So e-fuels is considered a bridging technology. So I think there's general consensus that if you take the entire energy generation from, let's say you do it through solar or wind, and then the distribution, conversion, and then finally usage, it's very inefficient if you use e-fuels, because it takes a huge amount of renewable energy to create e-fuels that are then burned in an industrial combustion engine. So the better idea is indeed actually just to ship those green electrons all the way directly to the car, into a battery, and then drive off. But we know this is not going to happen overnight. We know that cars, and in particular trucks, very important trucks, they're here to stay for decades. So therefore, it is a bridging technology for sure.
It's a bridging technology, so we have to be prepared for electric vehicles.
Yes, we have to.
There isn't too much of a life for ICEs.
There is not a life for ICEs. There's the conversation about hydrogen in particular for those applications where there's a long distance and for very heavy duty vehicles such as tractors, trucks, any kind of this size, that might actually have hydrogen as an energy source. but not so much the e-fuels, and for sure not the way we think about it today.
Okay. Now, the other part of your presentation, which was very fascinating, was this digital twin.
Yeah.
Now, to what extent is it in vogue, for that matter, in Europe? And do you see a lot of Indian companies asking you to make a digital twin for their factories?
Yes, we do see digital twins all over the place. So you can have them on a very small scale level, even on a molecule level, so that you can look at the compounds that form certain pharmaceutical products, right? So you can really look at small, micro, nano structures and take a look and do a simulation. Then you can build it for, let's say, a part or a machine. Then you can make it larger for factories. And you can make it even larger for entire city districts or even nature, coral reefs, that kind of nature. And the benefit always is that you can solve real-world problems in the digital world. Why? Because you can do it much faster. Because once you have digitalized the whole process, you understand nature, you can simulate, you can optimize, and then you can feed it back into the real world.
But is it much in vogue in India? Are people asking you for,
yes,
factories to be set up both with the digital twin?
Increasingly more, increasingly more. We see this today more on the machine level, on the machine part level. We see this from the pharmaceutical industries. We see this from the semiconductor industry. They're very, very interested in it. Because the digital twin is in particular interesting for those industries that have huge expenditures in terms of capex, and that are under intense time pressure. So think about, you mentioned the EV vehicles, batteries. Batteries are really needed, and you need to build them. And so digital twin can help really to accelerate and make them more efficient.
Okay. Well, when you are approached by companies in India for digitalization, or for that matter anywhere, they're not always asking you for a brownfield or for a greenfield factory. They have a brownfield factory. They want to digitalize some aspects. Now, is that a problem?
It is a huge problem. And you're absolutely right. Most of it actually is, you got more than 60 million small to medium-sized enterprises, and most of them are brownfields. So they don't need fancy big metaverses. They will need to have a simple connectivity. And this is what we also provide. So there's a lot of sensors in the meanwhile that you can retroactively fit to any kind of pumps, valves, whatever that is. You can then wirelessly connect them and have them machine learning, artificial intelligence look into anomaly detection. All of that is possible already today. And we make this for buildings, we make this for machinery, we make this for grids. So that way we can do what we call brownfield digitalization.
Improvising a brownfield factory is very much a Siemens interest.
Absolutely, and as we discussed also today, is we try to drink our own champagne, that is, being the customer zero. So the transformation of our own factory in Culver has really demonstrated that you can do something like that.
Yes, it's a 50-year-old factory.
It's a 50-year-old factory, right? And so really with startling successes when it comes down to higher productivity, higher flexibility, and better yield.
Okay. Digitalization also means a lot of consumption of power.
Yes.
So how does Siemens offer its solutions? When you offer digitalization solutions, you are also encouraging more carbon emissions.
Well, a couple of points. Number one is we provide the tools that enable digitalization. It's usually being operated by our customers, except that if we run the software for our customers as a service, then you're right. The way we approach this is, of course, through PPAs, so really power purchasing agreements. Also, Siemens has a RE100 commitment and pledge where in our own operations we want to be carbon neutral by 2030. So all of this is happening. There are studies, though, and this is very interesting, the question is digitalization actually helping for decarbonization, or is it actually contributing to...
They seem to be contradictory.
They seem to be contradictory. Now, if you take the math, the studies, all the scholars would say, round about the ICT sector has about 4% of global greenhouse gas emissions. Mm-hmm. But because of the power that it has in terms of efficiency, productivity, everything that it can bring, it can contribute to 40% of greenhouse gas reduction. So if you take that, you would have a level of 1 to 10. Yes, you need to look at net and cross, but I think the net benefits are purely there.
Okay. Well, let me come back to this digital twin and the state-of-the-art factories that Siemens helps to set up. It would be expensive. Do you think that with the coming of these kinds of state-of-the-art factories, the small and medium enterprises in countries like India could get left behind? Is it likely to create a bigger dichotomy between the big and the small?
So the way I think about this is actually not size. I think it's more what you mentioned earlier, is about greenfield and brownfield. And let me give you an example. We are working with a lot of startups that use those digital tools from the very, very beginning. And the way we provide them to them is through software as a service. In other words, you don't need to have your own IT administrator. You don't need to have all the competencies how to install it. You don't need to have your data centers and so on. So you just plug into it and you consume it from the cloud usually. So we really make it very simple. Then you have a subscription, which means you only pay as you go, as you use, right? So therefore it makes it very predictable. As a matter of fact, in particular for startup, it's great because they don't have cash at all. So for them, preservation of cash is huge. So in that sense, the SaaS model is beautiful. It works for them beautifully. So the digital twin is not necessarily just for the big guys. It is also in particular for smaller to medium-sized enterprises. The biggest challenge is the brownfield, greenfield conversation. That is indeed a challenge.
Okay. Now, coming back to decarbonization, it appears to have got a back seat after the Ukraine war. I mean, people just went back to coal because that was the emergency, and fuel and gas, oil and gas were both scarce. Do you think that that trend is going to continue? That people will pay less attention because of the emergency? Did it push back the decarbonization in a big way?
So numbers would suggest that for sure the dynamic has slowed down a little bit. On the other hand, though, if you look at all the large companies around the world, all of them have some shape or form of a target to become carbon neutral sooner or later, the majority being 2030. Now, the trick is 2030 looks far away. But in industry, in an industrial setting, usually your investment cycles are at least 5 years. So think about it. So you're almost there. You have to act today in order to make this work. And in Europe, in particular, in other geographies, you have a lot of carbon taxes. And these carbon taxes, I can tell you, they will increase and increase the closer we get to 2030. So the pressure will rise. And I believe those will win that act already now, because it's going to get more expensive as we get closer to 2030.
Okay.